Welcome to the Financial Freedom Through Apartment Investing, affiliate of the GOB Network of Apartment of Investors. My name is Mark Caesar, and I want to thank you guys for joining in, and to all of you guys on social media land, welcome. So today's going to be a very great day. I have a good friend of mine, Matthew Perry of the LMP brand, who will be speaking to us today on how to dominate your market. So Matthew, I will let you give your bio. I think you will do it much more justice than I ever can, sir.
Dominic the Market. Wow. That's like pressure. Um, Good evening, good afternoon, everyone. Matthew Perry here. Uh, I am actually from LMP Asset Management, not LMP Brand. Although I am
Apologies.
called LMPB, LMP Brand, that's where that comes from. Um, the I guess my start would be I started my career in investment banking. That actually started my career in real estate. I was uh, uh, I was given a task back in 2007 of identifying uh, the best areas to invest in from real estate for. You can imagine like the big wigs of investing, the millionaires, the billionaires, like where should they invest their money if they are looking at real estate? And my team took about a year to do this. And we identified a number of areas where it will be a great place to focus on real estate. Again, back in 2008, right before the crash in 2007, right before the crash in 2008, if I'm sure you all remember that. Um, and that actually got my start in real estate. Uh, in 2007, we looked at every zip code in the United States, and based on a number of different, uh, how do I put them? Number of different, what's the best way to put it? We basically just looked at a number of different frameworks and um, to decide what the best place to invest would be. Uh, and we came up with a top 10 areas to invest in the United States, one of which was Rochester, one of which was actually Buffalo, which at the time was a very depressed area. And that actually got me started into real estate personally, um, where I started investing in the upstate New York area. So, if you think about, Lockport, Buffalo, Rochester, and all the suburbs associated with those areas, um, they they were in the top five in every category we looked at. Right now, I have 100. Now, I actually didn't tell you about the smart. I just closed on another deal, so I'm at 220 units um, in the upstate New York area. Um, and we have, in terms of large scale apartment buildings, I would say 30 and up. We have three of those. Um, and I would like to also say that before REITs were cool, I had already created one. So when I was in school, I went to school at Baruch, which is I don't know how many people know about New York City schools or CUNY schools. That was a CUNY school back in 2000, not even 2000, 1998. Um, and It was known for mostly accounting and finance. Um, Now CUNY and Baruch is known for a lot more than that. But back then, it wasn't known for real estate. But I started back in 2007, and now, what is it, 14 years later? with 200 plus. Um, I in terms of just how do I put it? In terms of apartments and investing through apartments and REITs. When I started, it was just investing in one apartment here or one property here or there, or two bedroom, one unit, 2 units, 3 units, and it sort of grew because people were interested in investing in real estate, which is why I say I'm the sort of the unknown uh, person who started REITs. So before apartment REITs were a big thing, um, I had my group that I used to go to school with that were interested in doing or being a part of what I was doing, um, and that sort of pole vaulted us into doing what we're doing now. We have, I would say, 4 apartment or buildings that are 30 units and above. The other units are anywhere from 5 to 10 to 8, four, threes, twos, ones. Um, but it boils down to, something that's similar to what Daryl is sounds like what Daryl is doing, creating an opportunity for people to invest in real estate that um, didn't have the opportunity to do it outside of coming together. So think about like a mutual fund, right? Mutual funds is for people who can't invest in individual stocks for a diversity perspective, right? So creating diversity within real estate is what I was able to do. Again, going back to 2008. When I first started with $225,000. I put in half of that because, in my view, I had to be the largest investor and take on the largest risk, and everyone else, took on the rest. And now we're about 12 million uh, on book value. And given where real estate is now, whereas the seller's market, it's much higher than that. But based on book, we're about 12 million. Um, in terms of just my background, investment banker, um, finance has always been my passion. Um, one from just individual person's financial literacy, and then more broadly from just as an African American, I thought that was also important to build out African American literacy across the board because I think in that regard we we we're not where we need to be in that regard. So my hope was to increase one the education of people of education of real estate and also how to make money in real estate as an alternative to stocks and bonds and some other things that you can invest in.
Awesome. So, just a few questions based on. I know I picked the topic how to dominate your market, and I believe that is a very important topic as an investor because a lot of people find it difficult to navigate certain markets, especially for newcomers in the space. So, can you explain how you tapped into your market and the process that allowed you to actually start taking down deals, closing deals, and so forth?
So I would say the first thing is the importance of managing debt and taking on debt from a commercial standpoint. We all know debt in terms of just like I'm an individual investor. You want to, you go to your local bank credit union, whatever the case may be, and you invest. You look to them to help you invest. But it's a very different environment when you start talking commercial. And that took me about 7 years to get to. Um, and because they want to see, tax returns where you're making money, and they want to see that, the properties are profitable, et cetera, et cetera. And they want you to do it for a certain amount of years before they even think about investing in you. And mind you, I started in the middle of a crisis. So 2008, people were um, leaving homes, let alone buying homes, um, because of what was going on at that time. So it took me to about 2012 to 2015 to really start getting traction with banks. Um, and the banks were, you know, they were fully funded by the government, but they weren't really willing to give those funds to individuals. Um, so really, a lot of it boiled down to relationships, to the point where like I was actually going to diners with banks, um, and letting them know who I was. They cared about who I was, because they weren't investing in the property; they were investing in me. They wanted to know that I knew what I was doing. They wanted to know that I was able to manage and meet, DSCRs, debt service coverage ratios, for those that may not know that. They want to know that I was able to do it. So the confidence wasn't in the property; it was in me. And I think that actually, while fair or unfair, however you want to look at that, I think that actually helped me in the long run, because I was able to show that, take me as an individual out the equation, but take my knowledge and my ability to deliver, put that into the equation. Um, and I find myself like talking to a lot of people, a lot of banks, in that regard. At the time, uh, as an investor group, I'm the managing member of my investment group, LMP Real Estate Partners. I have 25 investors, that are a part of what the organization does, but I'm the face of that, and that matters personally and for the business, because they don't look at the other 24 and say, okay, what do their financials look like? They only care about mine. So they look at what my credit score is. They look at you know what I am bringing to the table in terms of, you know guarantees, which is a big part of this conversation. And they look at what I'm able to deliver in terms of their requirements for returns on equity. So, from that standpoint, I think that uh, there was a lot of, what's the right word here? There was a lot of positive from that standpoint. Like you have to, like, your credit has to be great. You're, solidified, like who you are as from a financial standpoint. Like, you're not running up debt just to run up debt, because they pay attention to all that. If you look at what we're going through now with, COVID, and, people that are struggling, there's truly people struggling with COVID. And I have a saying that good people always try to do the right things, bad people always find a way to do the wrong things. And the ability to show them that even through that you're able to manage, um, that's an awesome situation. Particularly since, if you think about it, what we are dealing with today, um, they're asking us to be the government as landlords. Don't kick anybody out. You can't kick anybody out. People can pay or they won't pay. There's no penalty for not paying, right? That's just the way it is. And so, how do you manage bank expectations at the same time as managing your own expectations just in terms of rate of return for what you're investing in. And that's a fine line to manage. And I think that I've been able to do that um, with just having the collaboration with one, just talking to tenants, having good conversations about what are they really struggling with and what they're not, and building those relationships. I know a lot of landlords like to just collect money and say, the end of the day is about the rent. And unfortunately, you're dealing with people's lives. And that's what I spend most of my day doing, dealing with people's lives, you know, in terms of just uh, what they can afford, what you're willing to give up, what you're willing to work with them, to what degree you're willing to work with them. All that makes a big difference in how um, you deal with the circumstances that we're dealing with today.
So I will open up the floor for, since it's a small group, I will definitely open up the floor. If anyone has any questions, feel free to ask. I will ask questions as well. So in the interim, now, what are the key metrics that you use when you're working the market, when you're looking for your deals? What do you look for that fits your criteria and that helps you meet the criteria that you present to your investors?
So, I mean, for me, it's um, I have a rate of return. My rate of return is 16%. Period. If it doesn't meet 16% at a minimum, and I'm basing that on, I know I've got maintenance to do. I know that you know everybody ain't honest, and they try to sell a place. So at the end of the day, you're trying to get a place that will maximize your return, but at the same time, you already going in that you're not going to know everything until you get in it, and you're not going to know about all of the tenants that you get in it. You're not going to know about all the issues that you get in it. I give you an example. I bought a property that was built brand new from the ground up. It was a mansion that was turned into like 10-unit building, and um, all the electric is screwed up. They half-assed on the electric. Pardon my French. Like but they did. That's what they did. They didn't do. They cut corners essentially, and you're going to have those situations, but you got to build that into your model, and that's why I say 16%, because I assume that 6% or so is going to go to issues that you're going to find that nobody told you about, and that's going to just come up. Things that are going to come up that weren't expected. City expectations. You have inspectors that have nothing much to do right now except hound you. That's how the city makes money. And so you have to build in some of those unknowns into your equation. So I build in those unknowns into my equation, and my hope is at the end of the day I'm at least doing 10% plus for a unit, a building, and if it's more than that, that's awesome. If it's less than that, then I messed up somewhere. I missed something somewhere. But in general, I try to do 16%, um, with knowing that I'm just something I'm not gonna catch.
So for those in social media land that don't know what rate of return is, can you elaborate a little further? I think everyone on this platform already knows.
Sure. I mean, and for me, it's cash on cash. It's how much money do I put out, how much do I return. I don't look at what the bank gives me in terms of mortgages and things like that. That's irrelevant. That's part of the expense at the end of the day. Interest is part of the expense. So, what is it that I am um, generating what I think I can generate from a property. So, uh, in that regard, I focus on, how can I either enhance, um, or maintain, depending on what the property is, um, the rate of return. Again, keeping that like 16% is my number, because I find that as I've done this for now, I don't know, 14 years, that seems to be the right number. At first, when I was first doing this, I was looking at 8%, 7%, 6%, thinking, okay, I'm doing better than the market, you know, so I'm okay. That's what you think about. You think about, you compare, like, well, if I took this money, put it somewhere else, what could I be making? In general, you think about the market. The market, generally speaking, if you think of S&P, 6%, 7%, 8% if you're aggressive, is what you expect from the market. So can I beat what the market is giving me by working in real estate? So that's how I come up with, my number. Anything that doesn't fit that profile, I'll just pass. I'll essentially just pass on.
Feel free, Jim. Open floor.
Matthew, I'm interested in hearing more about your journey, about where you started and when you started investing and what asset classes, what is your target? What do you look for as far as the asset? Is it a C class, a size? And where do you invest?
So I am currently invested in Brooklyn, New Jersey, Rochester, and Buffalo. Those are my four areas, that I'm invested in. The reason for those four areas is because those are areas I can personally get to. That's another point of this that I think is important for every investor. There's one thing to, you know, invest in, let's call it a REIT, and, being, Georgia and live in New York. And I think something Daryl mentioned something like he's something like that, or similar to the terms that's just the how the length of where he is compared to where the investment is. I always like to look at places that I can get to. Um, I want to be able to see it. I want to be able to touch it, feel it, and understand it. Like that. Again, like that's just no different than if you invest in the market. You want to know what that. You want to know about that company. You want to know all the ins and out of it. That's how I am with real estate. It's a real asset. So when you think about real assets, you want to be able to touch it, feel it, and understand it, particularly in the area that it's in. So those areas were close enough for me to either drive to, take a bus to, take a plane to, within a reasonable amount of time. So that's why I chose, that demographic. How I started, like I said, I started in investment banking, and there was a project that I had to do, that related to real estate and advising ultra high net worth people on where to invest over the next 10 years. Again, back in 2007. And I realized when I did this project for the company, Merrill Lynch was the company, for those that want to know. Um, I saw that this is an opportunity for myself. Um, and I took advantage of that learning from through the company to, do it for myself. It took me. I spent a year really looking at Rochester and Buffalo. I was already in Brooklyn because I'm from Brooklyn, um, so I already knew Brooklyn. I moved to Jersey in 2008, so I knew Jersey as well in that regard. So it's really the upstate part that I need to spend some time on. Back then, upstate New York is looked at as college towns. You go to Binghamton, Binghamton University, Albany University. Those are the sort of the hot spots. But I thought that, Rochester and Buffalo, because of the depressed prices, made more sense. The biggest thing in Rochester and Buffalo was taxes. Taxes are high, but when you think about the rents, you can get like you can get a unit. And I'm gonna just give you an example. In Rochester, for a house, you can get 1,200 a month plus, water, which the tenant will be responsible for, and your taxes was like 2 grand. That was what it was back then, and it still is to some degree today. So when you think of do the math, right? 1,200 times 20 times 12, you just do the math on that. The taxes were a couple thousand. The water was covered by the tenant. Landscaping was covered by the tenant. There's really nothing much you had to do for it except cover the taxes and insurance. Insurance was $200-300 a month, excuse me, a year, because it wasn't that expensive, and it's still even today is not that it has increased, but it's not nowhere near. It's not that expensive considering we are. I look at my house in insurance, and I pay like 3,000 for my house where I live. I may pay $1,000 for that property. That when you do the math, like it just makes sense. It just makes sense. Um, in terms of and for me, it was more like, if you take that model and multiply it, multiple times. So I started with, you know, a single family, two family. I went to three family in my fourth year. So I started with single families and two families. That's it. And then I went into my third family in my like fourth year. And then by the time I got to my sixth year, I was doing 8 to 10 family. And then after that, banks looked at me like, whatever you want, Matt. Whatever you want, we'll do it. We'll do it. Because at that point, I then built a I built a relationship with them, which I tell you that makes a difference. Like having a relationship with your banker. You know, the banker is putting their name out on the line because bankers go through a uh how do I was trying to think of the term they call it, but there's an evaluation that they go through with their committee, whatever their committee they want to call that is, and they have to sell their the deal to that committee, especially mostly on the larger deals. Um, and at the end of the day, if you have a good relationship with that banker, and that banker is um, respectable at their bank, at the end of the day, you're gonna get that loan because the banker will back you. As long as the banker back you, you'll be good. And that's what I've been able to do. Like as I've increased from 10 unit to 30 unit, I have a 30 unit build. That's two 30 unit buildings. I'm actually working right now on a 50 unit building. Um, and at the end of the day, the banker is who goes to represent you to the committee. All banks do that. If there's a committee that they go to, that they have to present your deal to. And, smaller deals, not so big of a deal. But when you talk about, 20, 30, 40 unit buildings, 50 unit buildings, 100 unit buildings, they have to go to a committee. They don't get to make that decision on their own. And it's not just the underwriter that makes that decision. So having that relationship makes all the difference in your ability to, um, secure the deal. Did I answer your
So,
question, Jim?
yeah, so Matthew, there's so much there to unpack. But one of the things that I wanted to follow up with before we unpack some of that is your background and where you come from. So some people just can't see a path forward. They don't, I grew up poor. I grew up in orphanages and foster homes and with a poverty mindset. And a lot of people grow up with that and they can't see a path forward. And they think that people that have advantages, it's going to come easy for them. So I'm interested to dig a little deeper into your background. you talked about some of the places that you've worked and some of the people that you associated with and some of the opportunities you've seen because of that. You have a business background with Merrill Lynch and UBS Financial and some other large organizations. So did you grow up in an environment like that where these things just come natural to you and that you and your family were already networking with those people? And how would you advise somebody who maybe doesn't know how to get started?
You break up a very touchy, very emotional subject. My mother passed when I was 16. My father, he kicked me out the house a week after my mother died. I lived on the street for almost a year before my aunt decided to take me in. And uh, none of my background, my family didn't go to college. None of them went to college. So I'm the first college grad on my mother's side. My father's side, there's a couple of college grads before me. My mother's side, but I wasn't really close to my father's side. So it's irrelevant for me. My mother's side my mother had 13 brothers and sisters. Um, all of the in terms of just progression in terms of what the world would say success is, the biggest person was working for MTA as a conductor. That's my background. I'm from the South, North Carolina. My mother was a nurse. My father was a cook for a homeless shelter. So you know, I, when you talk about like having a start, not really, not necessarily. I mean, I went to college because I graduated with a 59.8 GPA from college, from high school. Excuse me, from high school. I went to three high schools. I went to Brooklyn Tech, I went to Tilden, and I went to Erasmus. Those are Brooklynites in the here. Y'all will know what those schools are. And at the time, Erasmus was the worst rated school in New York City. And that's where I wound up graduating from. I locked into Baruch because they had what they call the SEEK program. Um, is Seek Education, Evolution of Knowledge. That was sort of the mantra of that. And it took people who were from impoverished areas who didn't have, the great GPA, and they brought them in. So that's my background in terms of, from that perspective. Um, I didn't come from, real estate. I didn't come from even working at Merrill Lynch. Like that was a thing. Like my first day at Merrill Lynch, I wore a black suit with a black tie and a black shirt. And my boss said, good evening. I'm sorry for your loss. That's what my boss said to me day one. Day one. So that shows you where I stood, and I was blessed enough to have people who sort of corrected me along the way. So my boss was somebody who he saw a young kid that just came from the hood. I did. I grew up in Bed-Stuy. At the time it was Biggie and Jay-Z on the corner. Like that's what we grew up with, right? And so, when you looked at if you remember back in the day, the video, and maybe you guys didn't want to claim this, but back in the day, they all wore the suit with the same color tie and same color shirt. That's what I did because I thought that was the right thing to do. But in business, that isn't what it means. The navy blue, suit with the white shirt and the navy blue tie. That wasn't what I grew up with. So when I went in the first day, that's what he taught me. That's what he told me. And about 6 months into my work, starting work at Merrill Lynch, he took me to uh, I'm trying to think of the name of the store, but it was where they basically back then you had like there wasn't Men's Warehouse and all that kind of stuff. You had Forshine, however you want to call it, where like he took me to get the right shoes. He used to tell me I wear club shoes to work. Like you wore club shoes, the same shoes with the rubber bottoms. Like with the black shoes, the rubber bottoms. Guys, you got to know about that. You know about those, and that's what I wore to work. He's like, that's not work attire. So I don't come from this. My family had a background and this and that. I come from like had to learn this stuff sometimes the hard way. Um, and thank goodness I had a manager who was kind enough to educate me on what it meant to work in corporate America and how to present myself. So no, I don't come from uh, a privileged background, of lack of a better way to put it. I don't come from that. I don't.
So,
I don't.
Matthew, what would you say to folks that say, well, okay, so you came from Brooklyn, but you were smart, you got all the grants, you got the education. We don't all get to have all of that, and so we can't make it the way you made it. It's not possible for us to succeed the way you succeeded and get into this real estate game. What would you say to people like that?
BS. It's just BS because I didn't come from any of that. Like this is like this is totally left from where I came from. Totally left. Like this is not like I lived on the street. Like I paid my way through college. I didn't get any grants or anything like other than Seek, which was said, okay, you can get into the school. But now you have to go to a remedial. You have to start earlier than everybody else because you have to catch up to everybody else because you're not smart enough to catch up there. You're not smart enough to be where everybody else is. So no, I did not come from that. Like that, like I would say that I came from the hood. I came from like not knowing how to present myself, whether in school or in corporate America. I mean, I had my first internship was at Payne Weber. And for those who remember Payne Weber, my first internship was at Payne Weber, being a assistant to the the wealth management group, which basically was the people who made the cold calls back in the day to get people to invest in whatever it was. That I was assisting those guys back in the day, and even to get to that point, it took my guidance counselor to back me to do that. Like it wasn't like I got in, like I did not get in. Matter of fact, Merrill Lynch did not recruit from Baruch. The reason I got into Merrill Lynch, I went to I'm trying to think of the organization name. Goodness, you guys are bringing me back. Um, Inroads. Inroads. That was the name of the organization. And they used to train you and get you ready for interviews and stuff like that. And Stan O'Neill was the first African American to lead an investment bank, other than Chenault, who was not really an investment bank. That was more just financial company. It was American Express. But Stan O'Neill was the first African American to actually lead an investment bank who did not come from investment banking, and he led Merrill Lynch. He did a presentation or a speech at a dinner that Inroads did, and I actually went ran up to Stan O'Neill when he finished his presentation. I left the dinner to go meet Stan O'Neill, and I got met with at gunpoint because Stan O'Neill at the time was getting death threats, and he had gunned security with him. And they told him he told them, chill out. It's just a kid. Chill out. And he talked to me for like 10 minutes and he gave me a Merrill Lynch bull. I don't know if y'all remember the bull that was the Merrill Lynch logo. And he gave me that bull. I took that bull to my interview with Merrill Lynch and told them why I want to be with Merrill Lynch because I believed in Stan O'Neill and I believed in what he represented. And I showed them the bull that they gave. There's a magnet, like a little keychain thing, bull that he gave me. And the two people that interviewed me gave me the role on the spot. So this was a lot of this was not like a fairy tale. A lot of this was just coincidence and luck. Luck. Because if I never went up to him and made that push, I would have never had the bull. If I never had the bull, they would have never hired me at Merrill Lynch. Never. Because I wasn't the type.
So Matthew, you said luck, but how much luck was involved with the fact that you made the decision to walk up to him?
That was just it. That was inspiration. I mean,
That was you taking initiative.
So, yeah, but that's anybody can take that initiative is the point. Like
anybody can, but very few do.
But see, that's I hear you, and that's a tough conversation because it's not. People have to have, my family thought I'd go to jail before I graduated high school, and I had to prove them wrong. Personally, like that bothered me. The fact that my own family thought I would go to jail before I went to college or graduated high school. That bothered me, and I had to prove a point. And that's sort of my point here. Like I personally, like at some point, you within yourself have to feel like I'm better. I can do this. Like you can't tell me I'm not this or that. Like at some point, it has to be inert. It can't be an outside influence. At some point, you have to feel it within yourself. And at some point, I felt within myself like, nah, screw you, F you. Like I can do this. I'm better than that. And I'm going to show you I'm better than that. And a lot of times I will tell you, my success has been energized mostly by proving people wrong. Proving people wrong.
Yeah.
And it's regardless of the environment. It could be your family, it could be your friends, it could be strangers. It don't even matter. For me, it's always been about. Now I've kind of passed that point because I've made it. Like nobody can tell me nothing. I've made it. But before it was about proving people wrong. And if that's what it takes to like put the fire in you behind, then that's what it is. That's just what it is.
Yeah, I love that. Thank you so much for that. But I would like to ask a follow-up question about, I'm a big believer in the way you built your wealth and built the support structure in the apartment industry, starting small and then growing exponentially, as opposed to spending 2 or 3 years chasing the dream of a 100-unit building. Instead, you start off with a 2-unit, and then a 4-unit, then an 8-unit, then a 16, then a 32. I think that's a much more reliable path. And I'd love to hear your thoughts on that.
I think everybody has their own path, right? I mean, the challenge you have with that statement is just everybody starts off differently, right? So I'll never judge a person who started with 100 or the 50 or the 20, right? For me, the path was I had 8 single families. I had 3 2 families. I worked that for 5 years until the banks decided that I was good enough. Now, and again, like that's not in your control to some degree, unless you got like money running behind you, and you got money to back you. Then so be it. I get that. That's the different conversation. But what I started, and again, when I started, because I started when the market was depressed and nobody was really investing at that time. Matter of fact, most people, if you think about 2008, 2009, those 2 years were the biggest years where people were actually walking away from their houses. People were walking away. So nobody wanted to invest at that point. Nobody wanted to buy at that point. There was so many, how many properties were on the bank's books because nobody wanted to actually buy at that point. I can tell you, I have 16 properties right now that I own that I bought from banks. Banks. I bought a property for $3,000. That property right now is worth 80 something thousand dollars. I refinanced that property, got like 70,000 out. And I literally put 4,000. I had $1,000 in just, putting, carpet or whatever it had to do in. I mean, if you think about that, do the math on that, the ROI on that. But it's worth 80, and I only paid like 3 for that property. So at the time, if you go back to when I started, the housing market was so depressed. And then now look at it now, I'm winning. I'm winning. Even if you think about, during COVID, most people did forbearance. I didn't do forbearance. I went to the banks and said, listen, I don't want forbearance. I will keep paying you every month. I want you to lower my rates. Lower all my rates. Don't do forbearance. So I got no forbearance for any unit that I have. But my rates right now are somewhere between 2 and 4. I started with 4 to 6. Now look, the magnitude of that, it may sound like small, but when you have a place that's have $1 million in a loan, but now it's 2% versus 4%, that's a big deal. It's a big deal. And that's what I'm looking at right now. So I really think that the circumstances that everybody has their own circumstance, everybody has their story. I have a story, just like I'm sure all of you have a story. It's all about how you take that story and make it your own. And the only way to make it your own is to believe in yourself to some degree. And at the end of the day, like I told you, everybody thought I was going to be in jail. And now look at me. I'm retired. I was a partner at Accenture running finance and risk globally. That's my last job. My last job after Merrill Lynch, Goldman Sachs, UBS, E&Y, all that. I ended up at Accenture, and I made partner, and they made me the global lead for finance and risk. And I said, thank you, but no thank you. Because I'm going to bet on myself before I bet on somebody else. And that's what I did. I bet on myself. And so for the last now 4 years, I've been retired. I haven't seen corporate America. I take off Mondays. I'm doing this because I'm cool with Mark. Monday's my day off. Like Monday's my day off. But I'm okay with this because it's Mark. Not because I have to do this or anything like that, but like I take Mondays and Fridays off. Fridays I play in Call of Duty. Like seriously, Fridays is called Squad Up Night. I play Call of Duty. I don't need to like worry about corporate America or I gotta get up to work in the morning because I believed in myself and I can make my own schedule now. I don't need somebody to tell me, oh, you gotta make this or you gotta do this or you gotta do that. I decide that. And to me, that's the success.
It is such a great, inspiring story, Matthew. I've got to jump to another podcast, but I want to say how grateful I am to have heard you speak tonight, and how grateful I am for Mark bringing you on, and also want to say that for all of those young guys or gals that are in a position or in a place where you feel like you can't get out. Um, that there's lots of people that have gotten out ahead of you, and it's all about connecting with those people and never being afraid to reach out and say, hey, I'd like to get to know you. And uh, and and I know for myself and the GOB network, I want to say that anyone that is in Brooklyn or any other neighborhood where they feel like they want to bring value to the neighborhood, they want to give back, that we're there to support you. And if you're looking for apartments that are between 1.5 and $5 million, if the numbers work, bring those deals to us. We want to help you get those deals done, and we want to make that commitment right now today that anyone that wants to try to build up those communities and give back to those communities and make just safe, clean housing for anyone that's in those communities, workforce housing, that we're there. We will back you. You don't need an education at an Ivy League school. You don't need an education at any school. You don't need to have worked at Merrill Lynch or UBS or Price Waterhouse or Goldman Sachs. You just need to reach out to people like Mark Caesar and Matthew Perry and make a connection. And they know the right people that'll help you get deals done and help you give back to your community. If you're a go-giver, we want to partner with you. And I'm grateful to have met you tonight, Matthew. Appreciate
I
it.
appreciate it. Thank you for your contribution. I appreciate it. Thank you for the questions.
And this was amazing. So I know there was a question in the audience. I know Kenneth asked, do you use the same bank for all of your deals?
Absolutely not. Absolutely not. You do not use the same bank. And the reason you use the same bank is because you never want to be, uh, you know, lack of a better word, a slave to anyone. You want to make sure that you have options. That's part of what you, when you're managing a portfolio, you're managing it on so many different levels. And one of it is to make sure that you don't owe any one person so much that you have to be beholden to them. I have, I'll tell you the banks: M&T, um, uh, ESL, Canandaigua, Chase, TD Bank. Um, I'm missing somebody. US Bank. Um, I'm missing somebody else.
Hey, Mark, can I ask a follow-up real quick?
Sure, go ahead.
First, great presentation, Matthew. Really appreciate it. But on the banker question, you said you want to build a relationship with bankers, but then you will have different bankers you go to. So how do you balance that? Like where you want to build up that relationship, so where say something's going to be a tough financing or a quick refinance, where you said you want to drop your rates from 4 to 6 to 2 to 4, to like go having those options, because you want to build that relationship with the. I thought you wanted to build a relationship with a banker where like you're like that'd be your go-to guy, where something comes up, you go to him and he knows you, and he can finance that, or look at be split.
No, you build up the relationship with different banks. Yeah, I agree. You're right. I did say you build up the relationship with all the banks. Like, listen, I spent a lot of time at a diner with a lot of banks. Like, it's not like one bank. Like, I spent like all this time. Like in next week, I'm going to have drinks with M&T. Do I want to go have drinks with M&T? Absolutely not. I don't. I have no interest in it. But they're one of my bankers. So yes, I will spend time with M&T. But I also spend them with Canandaigua. I spend time with TD. I spend time with Chase. I spend time with all of them. Part of what you do is building relationships. Like that's no different. We together as a group, as the investor, we build relationships. You do the same thing with the banks. So it's not like you have one, and they know that you're not dealing, especially at the size that I am. They know I'm not dealing with one bank. They know that. They see my whole portfolio. What they ask you for? What's your portfolio schedule? Show me everything you have. So they know that you're not just dealing with them. But I think it is very important that you spend quality time. Think of it like your lady. Ken, I want you to think of it like your lady. You spend quality time with her, right? Each bank is your lady. You got to spend quality time with them. I know that sounds so bad because you're not many women, but that's not what I'm trying to sound. That's not what I was getting at. I was not getting at that. I'm just equating that to an individual relationship you have with a woman, you have with every bank. And unfortunately, and the great part about it is, it's not frowned upon. That's not frowned upon in that world because they know that you have multiple banks because you don't want your full exposure to one bank. And matter of fact, no bank wants full exposure to you. Depending on what size you are, no bank wants full exposure to you. So you have exposure across multiple banks. Five Star, that was the other bank I was thinking about. But you have relationships with banks across the board because some banks do certain types of deal. For example, some banks like the apartment type deals. Some banks like the 1 family, 2 family, 3 family deals. It depends on the bank. Then you got your credit unions. They like a certain type of deal. So you can't have one bank or 2 banks that will just do all your deals, depending on how large you are. I mean, I'm over 200. So at this point, I have relationships across the board, credit unions, large scale national banks, regional banks. I have it across the board. So you have to spend time with all of them, but that's part of your job as managing real estate. It's not just managing real estate, it's also managing the financing too. So you know who to go to with certain aspects of your business. So if you have a 100-unit building, who do you go to? I know who I would go to. I wouldn't go to every bank and say, "Oh, give me a deal on a 100-unit building," because I know what they like and what they don't like. Just like they know what you like, what who you are. It's important for you to know what they like to invest in, what they like to spend their time on. So I just think that I hear you in terms of just like spending the time, but it's really important to spend your time across all of them.
So, quick question for you, Matthew, just to tie this into what you were saying. What's a typical conversation like with a banker for people who don't know how to talk to bankers, who don't know how to approach them? Like, what's the spiel?
I mean, it's not really a spiel. I mean, just be yourself. I mean, I've one thing I've always prided myself on is just I'm Matthew. You like me, you hate me. I'm going to be who I am. And it's up to you whether you either feel that or don't. It's up to you. And I think that has that served me well. Just be yourself. And I think the important thing is just know your stuff though. You can't just go in like I'm just gonna be Matthew and I'm gonna be whatever. They gotta accept it. You gotta know who you are. You got to know what you represent, and as long as you have that, then you kind of take the good and the bad that comes along with that. Because at the end of the day, who you are. You can sleep at night. For me personally, I need to sleep at night. I don't sleep as it is, but I need to sleep with the little sleep I get. I need to feel like I've been who I am in all accounts. So at the end of the day, regardless of the bank, I'm going to be who I am. But it's also knowing it's the homework, like knowing the bank. Like it's no different than when you go for interview. Do you not go and look up the company? what news what have they been in the news with, what product or service that they've done. You've done that, right? So when you go into the meet with them and interview with them, you're like, oh yeah, I know you did this. What you ask questions about that because they've realized they see you done your homework. So it's still about doing your homework with the banks too. Like know what the banks like to do, know what the banks like are looking for. It's okay to even just like understand like you know you're focused on apartment buildings. Is it the 50 unit? Is it the 100 unit? Are you okay with a 20 unit? Is that work for your portfolio? What you look at as the bank? Like have that kind of conversation with them because those are the things that the banks themselves are intrigued by. Because at least you're showing that you know I've done my research. I know what you like, and here I'm trying to present something that might fit within your portfolio or what you might like. I mean, it's no different than like speed dating, as they say. If you think about speed dating, it's the same concept, right? Like you try to figure out what the match is that might spark something. And they just like do you think how many times how many times I get on LinkedIn somebody looked at your profile and is a bank? It happens all the time. They look at my profile all the time on LinkedIn. Oh, it's somebody from XYZ Bank is looking at your profile. It happens all the time. Well, why are they doing that? Because they want to get to know you just as much as you want to get to know them. It goes both ways. It's not you're not always the one. You're not begging. You're not asking. You're an asset just as much as they feel they're an asset to you. You are an asset to them. Because at the end of the day, how do they make money off of you? If they don't have you, they don't make money. So it goes both ways. So just be confident in that, and I think you'll be fine.
Gotcha. Appreciate that. So we're at I guess we're 15 minutes into the hour. Just want to close it out for social media. And so for all you guys out there in social media land who is considering investing, this is the place you need to be. We definitely learned a lot. As you can see, we had one topic and we just sort of just vibrated across the room about, just getting out there and doing it, taking that action, massive action, which is my word for the year. And, just make it happen. Don't be scared. Connect with people. If you don't know how to do it, just connect with people. As you can see, we have a platform of a lot of knowledge here, and that one person you connect with can catapult your dreams and your future to the next level. So just wanted to thank Matthew for jumping in, and wanted to say next week, if you guys are not signed up, we definitely will have another buddy of mine who will be speaking on how to invest with your retirement account. So if you have not signed up yet, feel free to look our meetup on meetup.com. I will put out the link. It will be very informational. So we're going to do what my friend Aaron Goins dubs.
Sorry, I don't want to cut you. I just so everybody knows, if anybody want to connect with me, I put my email in the chat. I saw there's a lot of chat messages. My email's in the chat. If you look me up on L. Matthew Perry on LinkedIn, I am happy to speak with anyone. At the end of the day, we're all in this together. There's also, if you're interested, send me a message. There's a real estate group on Facebook that just really helps. It's just for landlords, essentially. Whether you're looking for maintenance people or do certain jobs, or you have a question, we're in it to help each other. So to the extent that you feel inclined, feel free. If not, no big deal.
Definitely. So Facebook land, this has been real. Appreciate you guys joining in. If you haven't watched it, feel free to watch the replay and connect with us. Find us on LinkedIn, and we'll definitely, talk with you and see how we can help and how we can grow. Until next time, peace. All right. So as for us now, we're going to do this thing that my friend Aaron dubbed the after party. So I will stop our recording, and we can just talk amongst men, and we can introduce ourselves. For those who are left, we can feel free to.
And women, come on now.
Well, I'm not sure who.
Dang, man, Mark, come on.
No more women on here, man.
Huh?
I don't know. So I don't. So I have. I'm not sure how to pronounce your name. I hope I'm not butchering it. Thay Nemo. Please introduce yourself.
Well,
We can hear you loud and clear.
how you doing? Good evening. I'm a real estate investor, and I'm new to this forum. I'm just trying to find like-minded individuals that are looking to invest in apartment buildings.
Awesome. And where are you based out of, and what are you looking for, if you don't mind me asking?
I'm based out of upstate New York, like the Brewster area, the upper north Westchester area, and I'm looking at anywhere, 18 and plus units. 18 or
Okay,
higher
cool.
units.
Cool. Well, you're in the right place, man. Feel free to ask any questions you want. Like I said, we have a lot of great minds here that will be glad to answer all your questions, and you could connect with any one of us on LinkedIn. We're here to support, man. We're here to help and support.
Thank you.
Thank you for jumping in. Robert, thank you for showing up, sir.
Yes. Thanks for getting that invite to me, Mark.
Thank you.
Yes, well, we're going to hear Garden State Funding. I'm doing the business financing, putting bridge loans together, doing the real estate, commercial investment properties nationwide, starting at 100,000 up to 5 million, doing it on a stated income basis for any investors that would like a second opinion on a property, on financing that. Matthew, great discussion. Good. Thanks for sharing that. And I'll connect with you on LinkedIn.
Absolutely. Look forward to it, Robert.
Yep.
So you do financing.
Yes. Doing the funding for business and real estate.
Okay, great. Awesome.
Yep.
Mr. International, if you can talk, feel free to introduce yourself. I guess not.
Come on, Mr. International.
All right, well, I guess I'll stop this recording since, he's not introducing himself, and we can just talk it out.